trapped actually in the wrong side of the market. And especially it doesn't matter if you're a swing trader, day trader, if you're using the lower time frames or higher time frames. This advice is for every time frame you can trade and for any market. And in this video I will show you a small tip, small advice on how you can actually get not being trapped into this trap of the big traders who are actually looking for those areas to for the retail traders to be trapped into the wrong side of the market. And we'll get back to this chart later, but let's start actually on the blank page, and we will draw a little bit for you to understand what I mean. So for example, if you have a bearish structure, of course everyone is having in mind of course this type of structure when market is creating lower highs, lower lows. And of course when it comes to trading, the charts of course are not pretty, such as this structure here, and we will not get like a clear lower highs, but sometimes price will move lower, move back towards the previous highs, trap some traders and at the wrong side of the market, and price will continue moving lower. Then this will repeat. Price will try to show this kind of a strength in the bearish structure. Many traders will start looking for potential longs here in this bearish structure because market is breaking previous highs. But what big traders will do, they will start looking for potential reversal back to the new lows. And this is very common thing when it comes to trading. This means that when we have like a structure to the downside, then of course what those swing highs and lows actually represents are of course the liquidity level. So previous highs in this case are liquidity, and when the big traders see liquidity above those markets, and when you combine those previous highs with some let's say other liquidity pool, as for example displacement such as fair value gap zone, price will try to reach to those levels. Market will try to kick this liquidity out of the market. For example, above those highs, what is resting is of course a buy side liquidity. And what big traders will try to do, they will try to manipulate the price. They will try to push the market above those highs, let the buy side liquidity area to be taken first, and then they will try to look for displacement, the previous displacement areas such as fair value gap zone in that level, in those areas up here, and in combination with some previous areas here. And what the price will do, they will try to manipulate the price into this displacement, the previous displacement areas, in combination with some buy side liquidity, and then they will start looking for to trap those retail traders. So retail traders will usually start looking for possible long trades here, and what happens, those traders will get trapped in, and the big traders will start pushing these price levels to the new lows. And what I want to say is that this kind of market structure with clear lower highs is not let's say 100% common, but what usually happens is we have this kind of a structure. As we said before, we have lower high, market tries to run up to those liquidity levels, the buy side liquidity levels, reach some previous displacement areas, either from this time frame or hard time frame. This liquidity will be taken out of the market, and then the big traders will trap those retail traders for the market to push to the new lows. And this cycle will repeat. And so of course sometimes you'll see like just a lower high and continuation, but in a lot of cases price will try to this kind of manipulation. So I will show you on the real charts example from today, how this looks like in the real markets. So let's jump to the charts. So for this purpose, for this video, we'll focus on this currency pair, and we will actually cover the 15-minute time frame and also the 1 hour time frame. This is the combination we will show in this video, and this is the 15-minute time frame. So as we said before, when you have a bearish structure, market will try to move into downside direction, and as you can see, just by following the price, we can see that market in this case is creating lower highs, and of course, when the market is in this bearish structure, of course, if we want to look for possible long opportunities, of course, what we want to see is for the market to break those highs, retrace, and then we want to look for possible continuation higher, such as a reversal to the upside, of course. So in this case, what do we see here is, of course, bearish structure. So now let's imagine that we have, for example, daily or 4-hourly support down there. Let's imagine this is the support and major area where we want to look for possible setups to the upside. So if we have like a bearish structure and market reaches this level, then we want to look for possible bounces and market structure shift in the opposite direction. Okay, so what do we have here actually on the 15-minute time frame? As we said before, is a bearish structure. And if you remember from before, what we said is that all those previous highs serves as a buy side liquidity. So as you can see, we have previous highs here, we have some previous highs here, of course we have swing high here, another high there, we have another lower high here, we have this one, and what happened here, as you can see, let me change the color. So here, as you can see, we have previous highs, which serves as a buy side liquidity. So market structure was at that point of that time, of course, bearish. But what happened here? Here we have, as you can see, lower highs. Then market broke the previous high here, this one, broke to the new high. And what retail traders will do, they will start looking for potential opportunities to the upside. They will start looking for potential opportunities to the upside. In this case, we have also a bullish fair value gap zone level here, as you can see. So we have price breaking this previous short-term high with the new high. We have the bullish fair value gap zone in between for retail traders to start looking for potential long trades opportunities. But what happened after those previous highs, buy side liquidity gets taken, price pushed to the upside, retrace into the fair value gap zone, and a lot of retail traders will start looking for potential long trades here. But as you can see, they get trapped. They get trapped by the big traders, and as you can see, market pushed to the downside. Now remember this picture, remember it, because now we will move to the 1 hour time frame. So as you can see, let me just put on the lines. So now as you can see, we marked the 15-minute highs, the buy side liquidity levels, and here we had, as you can see, new high, retracement to the fair value gap zone, and this as you can see, potential market structure shift here with a new high, and retracement to the fair value gap zone traps a lot of retail traders to start looking for possible continuation and higher. So we have bearish structure, new high, retracement back, and a lot of traders start looking for for long trades here. But this setup, of course, fails, and I will show you why, and I will show you how you can use today's lesson in this video for your own trading in order to avoid being trapped in those kind of setups, those kind of moves. And now let's jump to the 1 hourly time frame. So what do you see on the 1 hourly time frame? So here, as you can see, those black lines, those are the 15-minute highs, and here we had new high, a retracement back. As you can see, this is the 15-minute fair value gap zone market, retraced back, and a lot of retail traders will start looking for potential opportunities to the upside. But we ignored these kind of setups. Why? Because we have to combine, of course, lower time frames with the higher time frame. So if you're trading, let's say 15-minute time frame, you have to also check the 1 hour, you have to also check the 4 hour, you have to check the daily time frame, because each time frame tells the different story. And why this lower time frame setup fails? Of course, because on the 1 hourly, what do we see on the 1 hourly? Here, as you can see, during the Asian session, market moved to the downside. And what do you see? If you just focus on those candles, what do you see here? Price, as you can see, broke the Asian session lows here to the downside. And what do you see here? You see first displacement between first, second, and third candle. You see this one. You see displacement, the fair value gap zone here. Price moved down, and what do you see again? You see hard time frames fair value gap zone displacement, which serves as a liquidity pool. It serves in this example as a resistance. So market moved to the downside, and on the lower time frames, as you can see, it gave you this potential long trade. But as you can see, this was just a trap for the big traders to enter into the markets at this bearish fair value gap zone displacement and to bank on your mistake. As you can see, after this bearish fair value gap zone serves as a resistance, market pushed to the downside. And we want you to go back to the previous chart. As we said, price moved down, and as you can see, we have this trap on the 15-minute time frame in our example. But at that point of time, where you start looking for potential long trade, what do we had? We had this buy side liquidity level, the previous highs, and we had also 1 hourly fair value gap zone displacement, which work as a resistance. And on the lower time frames, you just got caught into this trap from the big traders, and you were actually looking for long trade in this example at this buy side liquidity, after buy side liquidity was taken, and also at 1 hourly bearish fair value gap zone. So in this case, you were long as a retail trader because you thought this is the market structure shift, but it was actually a trap for you to get caught on the higher time frames resistance displacement in this fair value gap zone on the 1 hourly, and market pushed to the new lows. So I want you to go over this video again, because those kind of moves are happening every trading day, and it's your job to understand what is the structure and where are the liquidity levels, pools, at what timings you are trading. And this video will help you to avoid being trapped into these trap zones by the big traders. And if you will learn what we just explained in this video, and if you will apply this, then of course you will minimize your mistakes and you will increase your chances for not being caught on the wrong side of the market just by focusing on the one time frame. And you have to understand, of course, the bigger picture of the market to understand the structure and where the market is probably headed. So thanks for watching. I wish you a lot of success, health, and we catch up soon. Take care.